Hey guys, it's GeoCrypto back with a new video. Today we'll be doing the Trading for Beginners series, part 3. And what we'll be covering today are some basic candlestick patterns. To get you started. Just some basic stuff. We're not going in depth that much yet. But these are some of the basic candlestick patterns that I think every beginning trader must learn before starting to trade on their own. Now let's just jump straight into it. We're on the Bitcoin chart. Once again, as you can see, since the last video, Bitcoin went up from about 35 to 38, 39k. So yeah, it looks like we're starting to see a little bit of a bounce from the last drop. However, just very quickly, we're still very much in a downward trend. So we first need to see it break this trend line. If you don't know about trend lines yet, go watch the previous video I made, number 2. It'll teach you a bit more about it. But yes, definitely still in a downward trend. I'd like to see Bitcoin above 40, maybe even 42k, somewhere around here. Before we really start to talk about if there's any possible upside. Now, the first pattern we're going to be talking about today is the bearish 3-line strike. It has about an accuracy rate of 80 to 85%, and it's usually a bullish continuation pattern. Now, this pattern, we'll have a look at it. Let's take a look if you can find it on the chart. Here it is, right there. You see at the end of October, you have 3 days in a row with lower, where the market is trending lower. I'm on the daily time frame, so 3 days in a row of lower trending, and then we see one big push to the upside. Okay, now what's very important, this green candle, it captures all 3 of the previous days. So basically in one day we've gone up more than we went down in the last 3 days. Now this usually works in a upwards trending market. As you can see, we're ranging up here. Now what you want to do right here, if you see these 3, wait for the bullish candle to print and then wait one more candle. Now if this candle is green right away as well, you can jump in, of course, you can do whatever you want, but I would advise you to wait a little bit more if it's green, or just let the opportunity pass, because usually we're first going down a bit more and then we're going up. So let's say you waited this day, you saw it go down a bit more this day, and it didn't go lower. Let's take a look at this. It didn't go lower than the last red day's low. So it didn't go below, in this case, like 59k. As you can see here, lowest it went was 60k. We would jump in on this candle. So let's say we jumped in right around the middle. And then we put a stop loss just below the previous low. So as you can see in the top of the screen right now, this low was at 59,350. So we'll just put the stop at, let's say 59k. And then you target either twice the risk, 1.5 times the risk, let's see, where is it, here, or once the risk, depending on your trading strategy. I usually like to go with a risk reward of 1 to 2 at least. So that's what we do right here, and as you can see, we would have hit that. Now if we were to jump in a bit lower, we'd be a bit more on the safe side. But on the other hand, if we were to jump in a bit higher, let's say you jumped in on this candle, so you jumped in like right here. If you didn't listen to my advice, you didn't first analyze it yourself. As you can see, if we were targeting twice the risk, we would have hit stop loss. So just be careful with that. 1.5 times the risk was still possible. Okay, now let's take a look at the second one. This is the bullish 3-line strike, and basically what happens here is market is trending down. It's trending down, and then you have right here 3 days in a row where the market goes up. Now what does this mean? If the market goes up 3 days in a row, it can either signal a potential reversal of the trend, or which is most often the case, then shortly after the price falls to even lower than the lowest point here, signaling that the trend is still going. And where I usually enter trades like this is if I see it falling. Once I see it break this point, so see it break below the previous low, I will enter a short position. So let's just do that right here. It's actually here. Let's say it broke below. Then of course you want to put the stop a little bit above the previous swing, and then you can target whatever you want. You can target 1 time the risk, 1.5 times, or even, see it right here, 2 times the risk. So let's go with my idea of targeting 2 times the risk. Draw it out, and you can see this one would be a winner as well. Now it will take a while. As you can see here, this was the 3rd of December where this pattern occurred, where you would have entered, and then the 10th of January, so only a few weeks ago, would be when you actually hit your target. Now of course you can take profits along the way, although I wouldn't really recommend that when you're trading on high time frames, as usually if you're right, and the market will go in your direction anyway. So now one of the easiest candlestick patterns to spot and also to trade on are engulfing candlesticks. So let's take a look at a bearish example first. For example here, as you can see, this would be a bearish engulfing candlestick, and what this signals is after an uptrend you get a bearish candlestick that basically engulfs the whole bullish candlestick, so the whole green candle, and even goes down lower than that. Now what this usually signals is that the bears are getting back in control, they're pushing the price down, people buying are starting to get tired, they're not buying as hard as they were all the way in these days. So what you'll do then, after you see the bearish candlestick, you're going to look for an entry. Now as we were in an uptrend, let's take a look, this was the uptrend, and then you can see when it broke down from here, would be a good place to enter a short. So you see it breaking down, you see it engulfing the previous candlestick, you see it breaking the trend line. So let's say you went short, you were a bit slow to the party, let's say you went short here. Okay, now once again, put the stop loss just above the previous high. That's a bit low, a bit higher there. And then you'll target, well, once or 1.5 times or twice the risk. And now here's another great example. As you can see, it hits a stop loss. However, if you were to target, for example, just 1 time your risk reward, then you would hit your target, even if you were all the way down here. You'd still probably hit your target even if you're really late to enter your position. Now, what you can also do when you're trading is, if you see something like this, wait for the candlestick to fully form first. So wait until this candle, and then you could enter here. But what you're going to enter on here is, you're not going to put your stop above, but you're going to put your stop at the top of the body from the last candle, because if price breaks above this, it basically invalidates your trade anyway. and then as you can see, with 1 risk to reward, you would also hit your target, or even a bit more, you know, it depends. Okay, so here you can see it as well. You see we have 4 days in a row of red, and then all of a sudden it prints this big bullish candle, you know, we go up 4% on the day. It's a good day for the bulls. So what you do, you enter a long position. Either you enter it once it breaks above, you can do that, or if you're a bit more on the careful side, you can enter somewhere here. You know, on the next day after this candle has closed, you get confirmation, and then you know, put your stop a bit below this one, and then as you can see, you target 1.5 or 2 times the risk, as I usually do, 2 times. So there we go. And as you can see, this one would be a winner then. Okay. Now the last pattern I'd like to show you for today is the hammer. It means the current downward trend is you know, slowing down, is getting weaker, and the bulls are getting back in control. Now what a hammer looks like, we've got a near perfect example right here. This one, the green candle. Basically what happens here, price has been going down. It's been going down a bit more, but then as you can see, near the end of the day, so near the close of the candle, we end at almost at the top of what the price has been ranging at for that day. Now what this usually means is the bears are you know, losing control, the buyers are stepping in, and what you want to do is jump in right after this candle, and you put your stop right below it. Why do you put your stop right below it? Why not leave some space? Well, if price breaks below you know, the handle, I suppose, of the candle, of the hammer, it invalidates your trade, because it signals the bulls are not back in control, the sellers are still stepping in. So you have no point holding it lower than what the handle of the hammer started at. So let's do that. You enter here, you see it prints a hammer. Oh, sorry. You enter here, put it just slightly below it, you know, give it a bit of space to breathe, like maybe 0.5%, 1/4%, whatever. And you're going to target whatever you like to target. I like to target twice the risk, and as you can see, it only took like a day or two, and it hits the target. Okay guys, so I found another example of shooting star. Now I have to admit it isn't perfect. However, if you can you know, almost certainly spot it, but you're not all that sure about this, just wait a few days, okay? Now the candle you see next to this shooting star, they're called dojis, which is basically a candle that almost only has a wick. So you can see the green part, you know, the thin green stick coming out of it. It's a lot bigger than the body itself is, which basically means you know, there wasn't much going up, nor was there much going down. And if you can see this for a few days, you know, almost no movement, like after a day or two, is usually what I use to get in. You know, we've gone up quite hard, you know, like a few percent in 2 days. Then we see a shooting star forming, and then we see 3 days of basically no movement. Yeah, you know, then I would say, okay, the strong move upwards has indeed been stopped. So maybe here somewhere, a bit higher, sorry. Maybe here somewhere I'll say, okay, I'll enter the trade. Now we put the stop loss above the previous high, and you can target twice the risk, I suppose. And as you can see, that would have won as well. Now an example where it wouldn't have been a winner is, for example, let's take a look. I just saw another one. Was it the other way? So yeah, guys, that's basically it for the video. I hope you've learned a few candlestick patterns. Just, don't use them solely to trade on. Get a feel of the market and use them as confirmation. So right here, you can see we've had a strong move up. The market had been slowing down for a little bit. We see one last push. That's when you think, okay, where do you think we're going from here? We've just gone down like crazy amounts. We started all the way at like 52. We went down all the way to 43, 44. So you're already thinking to yourself, okay, we have a choppy market. Where are we going? Where are we going now? Is basically what you should be asking yourself. And then if you see, a clear indication that we're going down, bullish momentum has gone mostly. We saw, of course, here, some people were calling this out back then as well. We saw a little bit of a bull flag. Here's the stick. You have a flag, another move up. So what usually happens after another move up, it forms another bull flag. Okay, it's not that clear on this one. I'll be honest with that as well. And yeah, if you were to enter right after it printed, of course you would have higher possible returns. But risk to reward of 2, just place it above the last swing, because if you're going short and price does break, really clean break over the last high, so this was the last high in this case, your trade is invalidated. So why would you hold it until here? You already know if price breaks like above this point, okay, I was wrong, so cut your losses back to there. Okay, that's the last thing I want to tell you guys. Now, if you have any questions, leave them in the comments down below. Make sure to hit the like button, subscribe to the channel, and that's about it, guys. I'll see you in the next one, okay? Bye.